AI data centers are estimated to consume more electricity than all of Japan by 2030, and surprisingly, the supposedly dead hydrogen industry could now provide the solution. I will now show you 4 stocks that, in my opinion, are particularly exciting for profiting from this AI data center hype, and we will, of course, as always, analyze them from both a technical and a fundamental perspective. Before we begin, naturally, a quick risk disclaimer. Everything that I state here does not represent a buy or sell recommendation and is not to be construed as financial advice, but is solely my own personal opinion. So let's dive right into it. Yes, the hydrogen sector, it already experienced a significant hype a few years back, and now it appears that some of these stocks are showing very clear signs of life once again, with some of them having already performed quite impressively. We'll begin with the first stock, and the first stock is actually one of the, or rather, it's the stock that has performed the best, one could say. And this company, in fact, is Bloom Energy. And Bloom Energy, when we consider it from a fundamental perspective, is truly the very best stock out of all the options, because it actually possesses concrete, tangible deals and is not just a purely speculative investment, but rather a company with a genuine right to exist, and also the corresponding financial figures that clearly demonstrate this. We see the stock has essentially exploded since July 2025. Back then still available for about $25. The stock has now almost increased tenfold at its current level, and the rally seems to be continuing. And the data center theme, as I said, will also remain a very big topic in the coming years. With such a large rally, the question naturally arises, the stock is probably also quite expensively valued. Yes, it definitely is. We now have a price to sales ratio of 27. 1GD done. That's already quite high. But we mustn't forget that Bloom Energy is also among the best performers when it comes to this. While we currently have a highly valued stock with a market capitalization of well over 50 billion US dollars, we also have the corresponding orders and, of course, the promising future prospects. We have a revenue here for 2025 of almost $2 billion, which is far more than all other players in this area. And the guidance for the year 2026 is also quite substantial. In this case, they are projecting revenue growth of approximately 50 to 60%. So that's already a pretty solid growth rate. And consequently, the stock has performed quite well, and it actually justifies these high valuations. And if we take a look at the product backlog here at Bloom Energy, then we can see that we have $6 billion in backlog. That is already an enormous amount. And the overall backlog is actually even considerably higher. And that simply goes to show once again how incredibly well Bloom Energy is positioned. If we take a look here at the key deals and the partnerships, then we primarily see Oracle being equipped here with fuel cells from Bloom Energy with a total capacity of up to 2.8 gigawatts. 1.2 gigawatts are already firmly contracted. That means contractually secured. And it's naturally not just limited to Oracle. They also have a strategic partnership with Brookfield, REP as well, and many others. And this simply shows that Bloom Energy has evolved from a niche fuel cell manufacturer, into a truly vital and strategic infrastructure provider for the AI data center industry. And above all, the argument for the rapid deployment of energy is really quite remarkable. This is what's called time to power. And this essentially means that the technology here is ready to supply power in just 55 days. And honestly, not many can keep pace with that. And that's why, in my opinion, Bloom Energy is certainly entitled to a significant portion of the market in this sector. The stock, to fundamentally classify it even better, is also, above all, very well positioned, or is showing itself very well. The gross margin, which has continuously improved here, if we take an average, has now risen to over 30%. Of course, with more scaling effects, the gross margin could potentially be further expanded. What is also very positive is that the net profit margin is slowly moving towards profitability. This means that in the coming years, we should also see continuous profitability in the quarterly figures. And if that is achieved, then naturally a re-evaluation of the company's stock could also be imminent. The cash flows were mostly still negative, but we do see positive outliers occasionally. And if you keep getting more orders, the chances are quite good that the cash flows will be consistently positive. Debt is declining. So fundamentally, the company is doing quite well, in my opinion, and also justifies the high valuation. And indeed, from a technical chart perspective, with the breakout clearly above the $200 mark, or rather above this consolidation phase we've seen here, I believe the rally can certainly continue. It's also part of my Wikifolio that has been doing quite well again in the last few days. Feel free to check out the link if you're interested. Yes, I think, and I'm very optimistic about Bloom Energy. I have the stock on a watch list. So I can potentially invest in it individually during pullbacks. So let's take a look at the next stock. That's also an exciting stock. However, we're now moving into the realm of stocks that are a bit more speculative. Yes, we have Ceres Power right here, which has also similarly seen some really good profits recently, and also clearly reflects this positive trend of the overall market, especially the fuel cell market segment. We can see that we also had a really good rally here coming up from its lowest points. The stock has already almost increased tenfold from its lowest points, and it's currently on the verge of breaking out upwards into Bloom Energy. I'm eager to see if that will succeed in the next few weeks. I'm quite optimistic, provided the overall market also plays along. From a purely technical chart perspective, it really does look good, but we still need to await the breakout above the €5 mark. Yes, fundamentally, when it comes to Ceres Power, one must say it's a bit a different stock than Bloom Energy, and their business model also differs somewhat. And that's because you are more of a licensing partner, or you have partners who then manufacture the fuel cells for you. That, of course, has the great advantage that you don't have such a large cash outlay. Yes, that means that the fixed costs are kept relatively low by simply passing on the licenses. And they also have some really prominent and well-known partners here, such as Doosan Fuel Cells from South Korea, Weichai Power from China, and Delta Electronics from Taiwan, who will then be responsible for producing the fuel cells for Ceres Power. But it must be clearly stated that Ceres Power's market position is quite different from Bloom Energy. We are still a clear step smaller here. You can see that in the projects. We have a demonstration phase here in Japan. In India, we have a 1 megawatt demonstration project, and a multi-gigawatt partnership with Centrica in the UK is planned. This is, of course, very interesting, and Ceres Power certainly possesses significant future potential here. And accordingly, it's a stock that I also find quite exciting in this sector, but naturally, it's also a bit riskier. Yes, we currently have a market capitalization of $900 million, so it's noticeably smaller. However, we have significantly higher gross margins of 70%. This is due to this aforementioned license model, because it simply significantly reduces fixed cost here. And what's particularly important for such small companies is, of course, that you don't have any debt, or at least an appropriate level of debt, that you have solid cash reserves. And that actually looks quite good for Ceres Power, unlike the other two stocks, specifically Plug Power, which we'll be discussing very soon. And here's the cash runway. Essentially, how long the company could survive with its current cash reserves is over 4 years. So it's quite substantial. This means the risk that Ceres Power could go bankrupt is accordingly low. And I think that if the overall market remains positive, Ceres Power also has a very good chance to continue rising in price. How far is genuinely quite challenging to predict at the current level, but should we manage to achieve a breakout, I anticipate that the subsequent technical chart targets will then advance towards €7.50. So you can already see the range, or rather the spread, is quite significant. We're talking here about 50%. Which the stock can then gain relatively quickly. You can see the movements right here. That's because it is, in essence, a correspondingly small cap stock, which is naturally quite well known for its volatility accordingly. Now, let's turn our attention to the next stock, and that is Plug Power. And regarding Plug Power, I've already mentioned that Plug Power is doing a bit, or rather, not just a bit, but significantly worse. We currently have cash of $370 million and a debt of approximately, half a billion to $1 billion. So this is naturally quite critical, because the cash runway is not even a full year, or roughly 1 year, and consequently this significantly increases the risk of further capital raises. This means that if you are invested in the stock, the situation for existing investors is improved, or of course, if you take out loans, then eventually if the debt gets out of hand, that there could actually be a significant insolvency risk. So you have to be a little careful here. And this is a stock that I certainly find interesting because Plug Power also has an interesting business model. Essentially, they handle the complete vertical hydrogen integration. So from the production of hydrogen to liquefaction, delivery, all the way to consumption, they actually offer everything on the market. And that, of course, also has an interesting niche, especially for companies that want to source everything from one manufacturer. This is naturally a unique selling point and can accordingly secure a good number of customers for Plug Power. However, and this must be taken into account, Plug Power is already quite risky, in my opinion, precisely due to its financial situation. They've delivered quite good figures recently. But it really needs to be seen if that will still hold up. The gross margin is negative. That has been a very big shortcoming until now. The gross margin was positive for the first time. This is already a very, very good sign. But it must, of course, also be sustained. That means the gross margin should also, in the upcoming quarters, then continue to remain positive, to even give the slightest impression that they won't end up insolvent in the end. So let's take a look at this stock here in the chart analysis, and you can already see it a bit in the chart compared to the other stocks. This stock doesn't look quite as good as, say, Bloom Energy, not to mention, but even Ceres Power is better here than Plug Power. That's simply also due to the fact that the market is precisely pricing in that Plug Power is performing significantly worse. And just if you look at the fundamental key figures, even just from the overall picture, yes, the negative gross margin we mentioned, and also the negative net profit margin, and above all, the cash burn is enormous. And that is simply a risk, and the market is pricing that in. This means that the upward movement for Plug Power is likely to be capped as well. Clearly, the stock can move higher, but the upside potential is simply limited without correspondingly positive headlines, or indeed the quarterly results that will be published now on the 13th. If there's naturally a relaxation here or a very, very positive outlook, then I also believe that Plug Power can rise well above this downtrend line. This means that we could move towards $5 here if the quarterly figures are good, and also beyond that, depending on what the guidance is. It is an exciting stock that offers upside potential. If the business turnaround really materializes, if that's the case, the stock could be poised for a re-evaluation. If that's not the case, the stock will likely continue to languish and at best trade sideways. So let's get to the final stock, which is Ballard Power. Ballard Power is also a pretty interesting stock because it serves a slightly different niche. We have here a manufacturer of heavy-duty mobility solutions, so essentially fuel cells for powering trains, ships, etc. So in areas where batteries essentially still don't make much sense, of course, one might ask how far battery research is advancing. I've heard that even the first cruise ship, a cruise ship powered by batteries, is being planned. Well, the question, of course, is what will ultimately prevail, what will prove to be more cost effective in the long run. But it could certainly be quite interesting if fuel cells do establish themselves in certain areas, that Ballard Power could accordingly dominate the market here. We currently find ourselves in a very favorable cash position. Indeed, we possess nearly $500 million in liquid assets. Our overall indebtedness is quite low, and our gross profit margin remains positive. So when we compare Ballard Power to Plug Power, Ballard Power is clearly performing much better, and its cash runway is quite substantial, extending over 6 years. So in this regard, one really shouldn't have much risk or any fear that the company might go bankrupt here. Also very positive is the delivered performance here, with over 75 megawatts having been delivered. That represents an increase of 38%. Well, the company has also shown in its quarterly figures that it can deliver, that demand is there, and that's quite important. And if interest continues, and I think given climate change, demand should also continue to rise. And the investment thesis is quite clear. Ballard offers the best risk-reward profile within the entire sector, but yeah, especially with an enterprise value to revenue multiple of merely 2.5 and possessing $500 million in cash. It is therefore very well positioned at this moment. And for the anticipated business turnaround, the stock certainly holds considerable upside potential. We see a somewhat similar picture here with the stock, like with Plug Power, but it's shown a bit better because we've already broken out of this downtrend. That means by definition in the weekly chart, we are in an uptrend clearly, but we still have some resistance ahead of us. The 200-week line is right there, you see. Then the next significant high point comes in at $4. And should we then manage to climb above that $4 mark, then it could also become truly quite interesting indeed that we then push forward into the subsequent price ranges. Those would then be sitting somewhere around $6. So these are the next price targets that I'm actually looking at, assuming the figures in the news reports are indeed correct. As I've mentioned before, Ballard Power has essentially followed the same trajectory as Plug Power. Maybe Plug Power is doing the same. Perhaps this is a bit of a glimpse into the future, and we're seeing exactly a similar picture, a negative gross margin that is now consistently positive and can also be expanded with scaling effects. The net profit margin also seems to be on a good path to eventually become positive, not in the next few quarters, but looking at it from a long-term perspective, perhaps by 2027. First off, the free cash flows are positive, so already strong fundamental signals where I'd say the stock is interesting and perhaps worth a look, or at least to land on the watch list. Whether one needs to invest directly right now, that's something one naturally has to decide for oneself. It is and remains a risky stock. With a market capitalization of $900 million, one must certainly be aware of the risks involved, but I think it is quite manageable. The cash is there to ensure survival, and if demand materializes, then there are also very good chances regarding rising stock prices. So that's all from my side. I hope you enjoyed the video. Please leave a thumbs up and hype it up. That would make me very happy because that really boosts the algorithm and yeah, pushes the video further and also supports me a lot. So please hype the video if you enjoyed it. That's truly the best support. And then until the next video, all the best to you, much success, and ciao.